There's a lot of investing strategies out there. Why do you believe that dividend growth is the best one for the current market environment?
Well, dividend growth strategies tend to provide a level of resilience in difficult markets while also being able to participate through a market expansion. What we see is the kinds of companies that can commit to consistently growing their dividends tend to have the kind of growth drivers that can work over the long term, but the resilience of a dividend in difficult environments is often reflected in the performance of these stocks. So as times get tough, dividend growth companies often hang in there better, but are also able to participate longer term through a market expansion.
Why is dividend growth a factor in the quality of a stock?
Well, if you think about what it takes for a company to be able to consistently grow its dividend through tough environments as well as through good environments, these tend to be profitable companies and they tend to be more stable companies as well. So, when you think about quality as a factor, really that tends to focus on both profitability as well as the stability of that profitability, the volatility of that profitability. So a company that's able over the long term through different environments to commit to growing its dividend, it has that inherent advantage and that bias towards quality almost baked into its business model.
Will we see more dividend raises going forward or dividend cuts because the economy is getting tougher?
Well, we've been through a pretty nice period of dividend growth. Every time we see a tougher economy unfold, we typically will see dividend growth retrenched to some extent. That's not to say that it comes to an end or goes negative, but very often we'll see it come down a little bit relative to where it's been before. I think we could be moving into an environment like that, but I think longer term, the trend remains that we'll see more and more companies looking to grow their dividends, really is a sign of the sustainability and resilience of their business models, a vote of confidence, if you will, to the market.
Is dividend growth also a sign that stocks need to compete with bonds because interest rates are rising? You can get a lot of money in treasuries or corporates now.
Well, we think of dividend growth less from a yield perspective, really more as that indicator of quality. So that's really meant to identify those stocks that can act as the bedrock of your portfolio because they are able to maintain that growth rate through difficult environments. We're a little less focused on the bond proxy element of a higher yield, more focused really on the sustainability of that growth as that indicator of quality and that ability to demonstrate resilient down market performance through tough environments while also participating through the cycle.
And how do you interpret a dividend cut? Is that a vote of no confidence? Do you kick that stock out of the portfolio immediately?
Well, it's absolutely a sign that there are potentially issues either with the business model or surrounding the financial health of the company. We try to predict or monitor the potential for a dividend cut well ahead of a company actually cutting its dividend. So we'll monitor the rate of growth, and as we see that rate of growth start to decline, we'll ask ourselves, is this an indication of a more difficult environment for the company, maybe fundamental issues, or is this something that's more transient? Perhaps it's a large deal that the company is taking a little time to digest, and we'll expect to see dividend resume to normal growth levels. But it's certainly at times the canary in the coal mine that warrants further investigation.
And then finally, where does the dividend growth strategy fit into an investor's overall portfolio? Should it be essentially the value component of someone's portfolio, or where should it be?
Well, we think of dividend growth really as that core fundamental equity exposure within an investor's overall equity portfolio. These are stocks that can participate through a market expansion, but typically provide resilience through more difficult environments. So we think of this as an attractive stream of steady returns over time that can compound over the long term and really act as that bedrock fundamental part of an investor's portfolio.
All right, thanks a lot for coming on and talking about it.
Thank you very much.